Welcome to Bhaarat Wealth. Today we're diving deep into the world of hybrid mutual fund schemes. Hybrid schemes offer a balanced approach by combining investments in both equity and debt instruments. Simply put, hybrid mutual funds strategically mix different asset classes to offer diversification and potentially manage risk. There are 6 main categories of hybrid schemes, each with a unique asset allocation strategy. The conservative hybrid fund is predominantly debt-focused, with 75 to 90% allocated to debt instruments and the remaining 10 to 25% in equity. Next, let's explore the balanced and aggressive hybrid funds, which have different equity and debt ratios. The balanced hybrid fund invests between 40 to 60% in equity and the same range in debt. Importantly, no arbitrage is permitted here. The aggressive hybrid fund leans heavily towards equity, with 65 to 80% in equity and the rest 20 to 35% in debt instruments. Mutual funds in India are permitted to offer either the aggressive hybrid fund or the balanced fund, but not both schemes simultaneously. The dynamic asset allocation or balanced advantage fund is an open-ended fund where investment in equity and debt is managed dynamically based on market conditions. Moving on to multi-asset allocation, this scheme is designed for broader diversification. This fund must invest a minimum of 10% each in at least 3 distinct asset classes. A key rule for multi-asset allocation is that foreign securities are not treated as a separate asset class. The arbitrage fund is next, an open-ended scheme focusing purely on leveraging arbitrage opportunities. Arbitrage funds aim to profit from price differences between the cash and derivatives markets. To maintain tax efficiency, this fund requires a minimum investment of 65% in equity and equity-related instruments. Finally, we have the equity savings scheme, which blends investments across equity, arbitrage, and debt instruments. It mandates a minimum of 65% in equity and a minimum of 10% in debt of the total assets. The Scheme Information Document, or SID, must clearly state the minimum hedged and unhedged investment percentages, including any defensive asset allocation. Mutual fund investments are subject to market risks. Please read all scheme-related documents carefully before investing. Thank you for watching. If you found this information helpful, please like, share, and subscribe to Bhaarat Wealth now for more insightful financial content.